Hey, what's up everyone? This is Hitesh Jetwani. Today we will do chapter number 2 from first year BCom Economics. Let us start the chapter. The chapter name is Demand and Supply Analysis. Now, let us start what we are gonna to learn from this chapter. So we do have few contents as you can see on this screen. The first one is law of demand with assumption and limitation. Second, we have utility analysis with limitations. Third, we have law of supply with expectation and factor effects. And then we have price determination and equilibrium. And last but not the least, we have the point which is change in demand. Let us start. Okay, so if we start with law of demand, so basically what law of demand says. So let us read the definition. If other things remain constant, when price increases, the demand decreases, and when price decreases, demand increases. There is an inverse relationship between price and demand. So here, what it wants to say, there are the two factors. The first one is price, and second one is demand. So if other factor remains the constant, if price increases, demand decreases, and in the same way, if price decreases, demand increases. So they have inverse relationship between each other. So here we have some assumptions as well, like we have first one is rational behavior. So what it wants to say, so basically a law of demand, it works in majority ways, but the first, as we can see, it is rational behavior. So it wants to say that actually depends on the customer. If customer or if the person has a rational behavior, if the price of commodity doesn't affect the demand, so that can be considered as a rational behavior, because here consumer doesn't want to change his preferences. Second, we have marginal utility of money. So basically marginal utility means satisfaction from any product. So if you get any satisfaction from any product, that may not or may affect as well on price, or if price gets changed, you may not change your product, because that totally depends on your utility. If the product gives you maximum satisfaction, so there are the maximum chances you may not change the product. Then we have law of diminishing marginal utility. So basically as we all know, as in previous chapter, in chapter 1, we have seen in economics that diminishing marginal utility means as you consume more products, the utility from that product decreases. So here it is also the main factor which we can see. Then we have population is constant, like as we can see, the population is getting increased day by day. So now what happens if the prices of product decreases, even though the demand doesn't get changed? Because here in the both ways, like if price gets decrease or increase, in both the ways demand doesn't get changed, because we have constant population, we have increasing population day by day. Then we have the main factor, taste, preference and choices. So here this is a main factor. So sometimes what happens, there are many people, they don't care about the prices. What actually they do, if they like the product, if the price get increased, they never change the demand as well. So here the main we can see taste, preferences and choices also matters for the consumer. Then we have prices of substitute goods. So now if the prices of substitute goods remains a constant, like what substitute goods are. So basically we can take example of tea and coffee as well. So coffee is a substitute of tea. So this is the main assumption of law of demand. We can also consider any of the two substitutes which can be used in either ways. Then we have no rumors about the future. So here what happens, like if any rumor is there about the prices, like as we can see the law of demand, what says, it says that if the prices of commodity increases, the demand decreases, but it not on the always. So sometimes what happens, if you get any rumor that in future the demand or the prices will more increase, so what happens here, so if prices increase, demand also increases, because here there is a rumor that in future there will be the more demand. Let us move ahead on next slide. We have demand curve with explanation. So now what demand curve we want to say. So as we can see from this chart, As prices are high, the demand is very low. As you can see from this picture, let us read the first analysis. As per the given data, we can see when the price is rupees 60, the demand is unit 5. As price decreases and demand increases, and it reaches to rupees 10 with 25 units. So gradually what happens here, or as we can see on prices of 60, the demand of units are 5 units, but as it is decreasing, like on 50 price it is 7 units of demand, so gradually it is decreasing. When price reaches at 10 rupees, the demand reaches at 25 units. So that is the main law of demand, and this is a demand curve. So this is the most important thing which you need to take care. In exam you need to draw the demand curve as well. Let us move on the next slide. Okay, then we have limitations of demand. Now what limitations wants to say, sometimes what happens, the demand law doesn't work. So in which things the demand law will not work? So the first one is inferior goods. So like if the goods are inferior, if the goods are very cheap, if the products are not useful even. So as you can see in the example, as you can see on the slide, the examples are like needles, pins, or stapler pins, or safety pins. So these are the things, it doesn't affect on demands. Like if the price goes down of needles, stapler pins, or safety pins, the demand won't increase. Then second, we have prestigious goods. So like we can take example of gold and property as well. So if the prices of gold and property increases, the demand also increases. So here you can see the law of demand is not working properly, because these are the prestigious goods. The demand of these goods will not decrease anytime. Then we have measurement of utility. So basically measurement of utility means the satisfaction which we get from a product. But however, if the utility remains the same, in the same way, the law of demand won't work. So like if price get increased, the person if getting maximum satisfaction, that person won't decrease the demand even though prices are increasing. Then we have complementary goods. So like what complementary goods are, so as you can see in this slide, we have pencil, sharpener, and eraser. So these are the complementary goods. So like if you're buying pencil, you need to buy eraser, you need to buy sharpener as well. So we have many example as well. So if we take example of razor, so like if you buy the razor, you need to buy blades as well. So these are the complementary goods. So here even the price get decreased, the demand doesn't get changed. So this is the main thing. And then we have utility of money. So law of demand, what law of demand says, if price get increased, the demand get decreases. But here the utility of money is totally different. So like if you take example in the beginning of the month, the demand or the utility from money is very high, so very low. So as time gets changed, at the end of the month, you get maximum satisfaction from little money as well, because you have very less money. So this is the concept where the law of demand will not work in the same way. Now next slide. Then we have law of diminishing marginal utility. So what it actually says, when a person consumes more and more same kind of product, the marginal utility from that product decreases. So as you can see, the curve is the same as curve like we had in demand. So here, if the quantity of product is increasing, the marginal utility decreases. So as you can see, if you are consuming a unit, like if you are consuming only 1 unit, your marginal utility is very high. As it is gradually going, if you are going with E units, means 5 units, the marginal utility is very low. Here I can give you a few example, like watching movies. If you watch one movie, at the first time it can give you maximum satisfaction. However, if you watch the same movie for next more 2-3 days, it won't give you satisfaction. In the same way, like if you take your food favorite food item, so in the same way, if you consume the first time, it will give you maximum satisfaction. But if you consume the whole day or 1 or 2 day continuously, it will give you less satisfaction than the first one. So this is a marginal utility. Okay, you need to take care about the curve as well. And as you can see the curve, like law of diminishing utility and the law of demand, both are same actually. Okay, then we have utility analysis and limitations. Utility of money. So basically utility of money, as you can see, for the rich people the utility of money is very less. Like for them, let's take an example. If two people have 10 rupees, like one person is rich and one person is poor, so rich people will get very less satisfaction from that 10 rupees. However, in the same way, the poor person would get highest satisfaction from that money. So here, that actually depends, like what age group we have, what income group we have. Second, income effect is ignored. So utility analysis, as we can see, if you consume more and more units, like the utility from that product will decrease. But here we totally forget about the income. If you are getting maximum satisfaction, and if you want to buy any product but your income is very less, you will not be able to buy that product. So that is the main thing. Third, we have price effect as well. Like I'll give you example. So as we can see from law of utility, law of marginal utility, like if you consume the same product second time, you will get less satisfaction. But what if you go to watch the same movie at 50% discounted rate? So that will give you the actual satisfaction, and it is more than the previous time when you watch the movie. Okay, the concept of time. So basically time plays very important role. As we can see, the technology is getting changed day by day. And if like in past you had a dream to buy any vehicle, now that vehicle is old. Like in past you had a dream to buy a mobile phone, but now that mobile phone is very old and the technology is growing. Now we have Android phones, now we have like iOS phones as well. So you won't get the satisfaction from the basic phone. Okay, and then quality of product, the same way. If the quality of product is very high, it may possibilities that you may get more satisfaction from the previous one. So here also the marginal utility law will not work. Then consumer behavior. So actually consumer behavior plays an important role. As we have seen in past as well, the consumer behavior is rational. In irrational behavior, it is very difficult to change the product. So customer would mostly prefer to keep the same devices or keep the same product. They won't change the product. And as they use maximum, like if you have iPhone, if you are using your iPhone for the whole day, it will give you maximum satisfaction from that as well. Here also the marginal utility law won't work. Then we have one commodity model. Now what one commodity model is, like you might have heard about ecosystem. Now what ecosystem basically is, let us take example. If you buy iPhone, so you need to buy Apple charger as well, Apple AirPods as well. So these are the things which are very important for your device or for anything. That's called ecosystem or one commodity model, because you don't have any other option in the same way. Next slide. Okay, so then we have law of supply, and that is most important question for your exams as well. Now let us read what is law of supply. When all factors remains the same, only price get changed. Price increases, supply increases, and vice versa. Now here, as we have completed law of demand, and as we saw that price and demand has inverse relationship. However, the price and supply has positive relationship. Like if the price increases, the supply increases. So here you need to see the concept as a producer. So if you are getting maximum profit from any product, you will increase the supply, because we all are here like to earn maximum profit. So as you can see from the graph, as from given data, we can see when the price is 10, the supply is 5 units. That is the lowest one. You can see the lowest price is 10 rupees and the demand for the unit is, or the supply for the unit is 5 units. But as it is increasing, when price reaches 16 rupees, So here your profit increases, and then the supply also increases from 5 units to 11 units. So here you need to take care that law of supply, the price and supply has positive relationship. As price increases, supply increases, and price decreases, supply also decreases. The next one we have exceptions and factor that affects on supply. The first one is, in exception, is rare goods. So sometimes what happens, some goods are very rare, like you cannot find maximum supply, you cannot produce that as well. Let us take example of rare currency notes. So if you are getting maximum profit from that product, you will not be able to increase the supply as well. Then we have perishable goods. So now what perishable goods are? So perishable goods are those goods which can be expired in some period of time. So you will not be able to wait for some time, that if you wait when the price gets increased, I would start selling at that time. No, you need to sell that product, because after some time this goods will be defective or will get expired. Okay, then we have production without profit motive. So here, as we see, like as price is increasing, so with the price your profit margin increases. But there are many organizations, or you can consider any NGO or anything, where they are working to provide welfare to the people, not for the wealth. So here, if any organization is there which doesn't want to earn profit but wants to serve the people or serve the country, so here the law of supply won't work as well. Then a supply of food grains. So here supply of food grains is also like a perishable goods. You cannot store the grains for long period of time. Yes, for some goods yes, but for some goods no. And then supply of labor. So supply of labor is like, you cannot generate labor. You have limited criteria for the labor. So you cannot generate labor by like, if you see, if you are getting maximum profit, you cannot do anything, like labors are limited. And then let us see that factor affects price of goods. Yes, so price of goods affects very highly to law of supply. As we saw, if price increases, the supply increases. That's very common. Then cost of production. So here what happens, if cost of production increases, so what cost of production includes? So cost of production includes like raw material, your labor salaries, your electricity, your rent. So these are the things. If the price remains the same, you won't increase the supply, because it may possibilities that the cost of production has increased and you are getting very less profit from that. Then we have price of substitute goods. So here let's take one example, substitute goods. So if the price increases of tea, right, we actually want to increase the supply of tea as well. But as we can see, the mostly market is covered, and the customer are habituated to have coffee. So here the law of supply won't work, because the choice, the preferences of customer, it has been changed. Then we have transportation cost. So that also plays very important role. If transportation cost, or as we can see from next topic, that is government policy, if that gets changed, like government increases the tax, or your transportation cost increases, you won't be able to increase the supply, because you are not getting much. The price number you can see, that's higher, but you are not getting much profit from that, so you won't increase the supply actually. Then we have rumors and prediction and number of firms. So if the number of firms increases in the market, it will very difficult to increase the supply, because there is a competition in market and there is very limited demand for the product. Next slide we have for price determination. Now the major question is how the prices are decided in the market. So the main question, like, who decides the price, consumer or producer? So basically answer is, the prices are decided by market. So where consumer and producer both plays very important role. Like how? So as we can see, the definition is given. Prices are decided by market, where seller and purchaser both are available. Prices depend upon the demand of goods and supply as well. So basically how it works, if the demand of the product and supply of the product are the same, so like if the demand of the product is 200 units and you are able to provide the supply, you are able to supply 200 unit as well, so that is the exact price. As you can see from price determination, price equilibrium curve, here you can see the law of demand and law of supply, the supply curve and demand curve, where it is intersecting. You can see P1 and Q1. So that is the main way, that is the main deciding point where we can see that in this way the prices are actually decided. Okay, so we have then price determination. If demand is constant, supply gets changed. In this point, as you can see the demand curve, so like how you need to draw this curve. So basically what you need to do, as you can see here, it is showing price is constant, so you just need to draw the demand curve first. So as you draw the demand curve, you can see there are the two different points where the demand is provided. So demand curve is only one line. However, where you can see like it is intersecting, you just need to draw the line of supply as well. So you can see there is one line, demand is constant, and there are the two lines for the supply. The second vice versa condition, if supply is constant, demand gets changed, so you need to draw the supply curve. You can see supply curve goes upwards and that's only one line, and you need to draw the line for the demands as well. So for demand there are the two lines. So here we are done with this video. Hope you got understand, and if you have any question, any doubts, just comment below. Subscribe my channel, like, share, comment, and stay safe. Have a great day. Bye bye.